Okay, hello everyone and welcome. Today is Thursday, April 23rd. Michael Boutros here with you on the mic. Good to be with you guys this morning. We did just get the print for the initial jobless claims for the United States coming in slightly higher than expected, 295 versus 287,000. You're not seeing much of a market reaction. You are seeing the dollar take off a little bit here, but dollar index continues to hold within that same range, guys, that we've been looking at. Near-term resistance lies with the trend line off the highs that we made back in March. So a quick update on what's going on right now as far as the dollar price action is concerned. But good to be with you guys this morning. Chris, Christian, Dale, Jay, always a pleasure. Terry, always good to see you, Terrence. Tom, JD, I see your question. We'll definitely go over the Kiwi. It's the second highlighted scalp in today's intraday report, so we'll definitely take a look at that. And Chris says, hi, Michael, hope you're well today. Could you take a look at Euro CAD and Sterling CAD at some point today, please? Sure, Chris, if I don't remember, man, just give me a quick reminder later in the webinar when we go through the setups. I'll definitely be more than happy to check out some other pairs you guys are looking at. So let's jump in. The focus for the intraday chart page has really been on the Aussie and the Kiwi for the last couple of days. Terrence, great to see you. Chris, you're more than welcome. And the Aussie has been sort of hung up. A little bit disappointed on the Aussie. We've been playing Aussie through Euro Aus mostly. If you guys remember yesterday, we took that scalp in the webinar. Guys, we'll keep our eyes peeled, okay? At any time during these webinars, if some triggers go off or some setups are favorable like yesterday, we'll go ahead and jump right in. I got a lot of great feedback from you guys. I hope you were able to make some pips on that run yesterday, but we'll definitely keep our ears and eyes peeled. A little tough to navigate the markets through the webinars, guys, at the same time simultaneously, but we'll do our best. So, looking at the Aussie dollar, we put this out last night, a nice parallel that mimics the slope that we've been in for the broader setup. Caught the lows. He dribbled a little bit below this, but the pressure still remains on that level. So here's what it looks like right now. We'll start off with the daily. The level of interest is going to be 77.09. If you guys remember, that's actually the slope support for the current operative move right now. It's yesterday's, or the 21st here, the close of that session was exactly 77.09, which was the low day for the week. Or, I'm sorry, this is the 21st. This is Friday's close. And a nice pivot in price, right? The reversal close that we made on that 12th when we reversed back high off the lows. Former slope resistance that caught this thing for multi-months since the October highs. All support right now just below that region. So we're looking at the scalp. Here's what it looks like. It's kind of hanging up right here at the 7,700 level. The focus, okay, is on that slope support on the breakdown here. Now you're getting some divergence into the lows. Price action making a lower low. Again, bringing it into a close so you can see it more clearly. Oscillator making a higher low. Not in and of itself a trigger, but you also do have a 3-point touch trigger here if we do get the top side break for a little bit of recovery. So if you guys are paying attention to the swing side of things, Jamie's still looking at entry near 77.83. That was posted last night. From the scalp targets, here's what we're looking at. A basic 236 here is not going to be stressed at 77.73, but you've seen some nice pivots in price right there, i.e. the high that you made in that stretch in Asia trade back on Thursday, and then a nice pivot here that we made yesterday in price. So that'll be an initial target, 77.73. Again, basic trendline resistance comes in right at that level that Jamie's looking at, 77.80, 77.83. The bullish, or the bearish, invalidation level is going to be yesterday's high, which coincides right now with the median line off the lows. Okay, so this region right here. You could probably move that bearish invalidation level to the outside here. Sorry about that. Computer's a little lagged here today. Right around there. All right. So still looking to sell rallies, falling out of favor a little bit with the Aussie. Like I said, most of the Aussie plays I've been taking have been through Euro. We'll look at that in a moment. Hey, Raj, great to see you in the room, sir. But that's sort of what I'm looking at with the Aussie right now. No plays right on the fold to start off the session. If, like I said, you get the trigger break to the upside and you get a clear opening range for U.S., we'll watch this. It might be a nice long to try to fade it again as you head into this region. But we'll have to see how the U.S. Open looks. Let's look at the 5-minute chart, guys, and see if there's anything appealing on that. So here's our U.S. Open range so far. Looks pretty tidy. The momentum signature since the Open of London has been largely 60-40. So there's not much of a conviction bias here near term. Just note on the daily chart that key support at 77.09. So that's the level we're looking to play. As far as trying to play the short on this, guys, it's going to be a little tough because your stop needs to be against 77.40. So unless we get a trigger here, which it looks like actually we might have. Looks like we might have just missed that. Would have been a favorable entry from right around here. We'll see how the U.S. Open looks. Again, guys, we're just opening up the opening range for the session. So remember, London low comes in right at support. So that's the level we need to break to really get a validation for a continuation back into that region. 76.60 is the big region we've been looking at since Monday. That's what we missed on this stretch here. And that's a basic 618 of the advance off the lows. All right, so the focus is on the U.S. opening range for Aussie. Not the favorite scalp, but something we'll definitely keep in view heading into U.S. Any questions on the Oz? I want to try to run through these and really focus on the ones that are in play right now and take as many questions you guys have as well. If you have any pairs that you're looking at, feel free to throw them out. Okay, Mark is in the room. Hey, Mark, nice call on that Euro Oz, by the way, yesterday. The RSI did hold 5 on the 40 level on the 5-minute chart, but something interesting happened overnight. We'll take a look at that in a moment. First things first, Kiwi Dollar. So the Kiwi on the daily, the focus has been, since the start of the week, it's kind of boring, but it's starting to finally pan out, the 77 region of key resistance. Confluence trendline resistance, R1, median lines, you name it, it was all up there. So we've been trying to play the south side ever since. The opening range for the week set up pretty nicely just below the 77.30 bearish invalidation level. So key resistance and bearish invalidation. You had the median line in there. You had the 786 retracement, 100% extension. This was just a measured move, giving us resistance. So the previous session, if you guys remember, we were looking for general short side bias while sub 77.30. Well, that's exactly what you got. You got the run right into 77.30. That held as resistance. You got a really beautiful trigger up there. We didn't take that. Our focus yesterday was on, if you remember in the scalp webinars, was on Euro Oz, but nonetheless, a really nice play. Really nice play. So last night at 10 o'clock, whenever the update came out, we were just testing 75.80, which was a 50% retracement and the confluence with that median line. It gave us a little bit of a bounce, but remember, I even noted this in the report, as long as momentum stays in the oversold condition, guys, this thing, that's when the trade is pressing. That's not when we want to try to fade it. So there were actually no triggers that gave out on the long side. If you got caught trying to fade this, I'd be very cautious. So JD, I know that you're looking to possibly look at a long here. The question was, can we look at Kiwi Dollar for a potential long scalp? The daily RSI has been holding a steady upward trend, and it's just starting to come into support zone. So I want to just kind of get a gauge on what you're looking at, JD, when you say that the daily RSI has been holding a steady uptrend, right? If we look at the daily chart for the Kiwi, yeah, this is not actually something that we want to use to validate the uptrend. Well, let me take a step back. First of all, momentum coming into support, guys, without price coming into support really doesn't mean much. Right? So if we look at the daily chart and we're looking at, I'm supposing that you're looking at this right here, JD, you know, there's still room to the downside here. Price is not at support. So for me to try to start fading this move at this point, a little bit premature in my humble opinion. You know, if this was coming into support and price was at the trend line, that's when, okay, you know, the reversal scalp, the fade starts to come into focus. Let's jump into the 5-minute charts and look for some triggers. But as it stands right now, you don't want to try to catch a falling knife. Okay, this thing's in free fall. You look at the 30-minute chart. Yeah, we made it back above 30. This was the only relief you would have expected. But then the trend line support, the lower median line parallel, which was resistance, acted, or support rather, acted as resistance. And again, don't let the wicks, the noise really bother you. Bring this into a line chart. It'll look much clearer. You see that? Support, bounce, break, instant resistance. That's validation of the break. So I'm not going to try to fade this just yet. It may come into focus, JD, as a beautiful fade as we get into 77, or specifically the next target down to 75.40, which would be a beautiful, excuse me, not 75.40. Sorry about that. 75 rather, and then 74.90, which would be a 786 retracement. Kiwi, Aussie tend to love the 786 a little bit more than the 764. Just an observation over the years that I've noticed, Com Block tends to favor the 786 retracement, and also the 886, which is just a square root. A lot of people don't use that retracement, but I've seen that catch some ridiculous lows as well. Long story short, JD, the focus still remains on the downside near term. I do think you probably do see some recovery as you head into these trend lines here. Let me show you where that's coming from. Okay, nice 3-point trend line here that also gave us the breakout trade for the long side last week, and that embedded pitchfork, which played out pretty well as well. And that comes in right around the 75.15, 75.13 level right here, depending on where we are in time. And then on to the 786, which is, again, if you look in price, irrespective of the fib, has been a very nice pivot. Okay, so that puts basically the focus zone on a break lower right around this region. JD, does that make sense? He says, got it. Right on. Awesome. Raj says, damn, I missed the Sterling key trade. Mike, for something like this, how would you enter the long position? It is like a vertical straight line. Raj, you talking about Sterling key, or you talking about the Kiwi dollar here? Again, the conditions that allow us to fade a trade, guys, need to be present, okay? You don't want to just start thinking to fade a move because of a massive decline like this. This can go on indefinitely. Remember, markets can stay irrational way more than you can stay liquid. So if you're trying to jump into a trade to fade the move because you're saying it's overextended, we're in overbought condition, I want to play the bounce off support, these types of rationalizations don't matter at all to me. Price needs to suggest, or needs to show me, I need to see it, that there is a pronounced shift in momentum, that we're seeing price start to bottom. And that is divergence, that's long trigger breaks, that's price action giving us opening range sessions to the break, to the upside. These things. Maybe you missed the first couple of triggers off the low, no problem. Okay? Our near-term nature allows us to wait for the pullback and re-enter. So I'll take a look at Sterling key in a moment, Raj. I don't want to sidetrack, but I will take a look at that in a moment for you. Let's take a look real quick at the 5-minute chart for the Kiwi dollar. So here's what the last couple of opening ranges look like. Tokyo didn't really give you much of a break. That opening range kind of just fell apart real quick. London's been a wash so far. All right, so we're going to see how the U.S. opening range looks. Again, I do think you possibly get a stretch lower before this thing turns, but the momentum signature since the breakdown, okay, and objectively, this was a break of the weekly opening range here yesterday. So objectively below 76.30, you're looking to the south side of the trade, right? And since that 76.30 break, if you look at momentum, every rally halts ahead of 60, halts ahead of 60. Now 40's been holding too, and that's why on the divergence that you're getting here, you want to be cautious about entering new short exposure. If you're holding shorts, this is just where you want to be bringing down your stops. But to enter new short exposure, it's hard to justify here as you hold 40, 60 in momentum. All right, so let's wait for the opening range break here for Kiwi for a little bit more guidance. Again, from my standpoint, guys, I'm not personally going to be looking to press fresh shorts from here. If we do get the pull into 75 into this region, I'd be looking for a possible rebound, and then we'll see if we can get some long triggers. But if you're not already holding shorts on this one, it's going to be tough to jump in from here. There is room, okay? There is room. Remember, this is the major support we're looking at on the daily chart. All right, Euro Key, our favorite play. We've been all over this one, the long side, the short side. It's been a fun ride, but at this point, you want to be a little bit cautious as we drift into the high. So here's what the Euro Oz looks like first on the daily. Again, just to review real quick, the premise of the trade, 137.88, massive level of support, low day close. Okay, the reversal close here, close to the lows that we made back in September. The opening range low for the week, operative median line support, you name it, it was there. And we've been trying to play the long side ever since. He had some beautiful short scalps as the opening range set up for the week. But here's what the intraday chart looks like. So yesterday, we took a long. It turned out to be a beautiful entry. I hope some of you guys were able to take advantage of that. Again, we got out initially at 19 pips. If you guys remember the 5-minute chart, it was the 50% of the retracement. A quarter got out there. We took out another quarter as this thing achieved just ahead of the 43 pip target. It was 38 pips on the gain there. And then on the pullback, we jumped out with another 19 pips for the rest of it right before this thing bottomed. Interestingly enough, there was a 40 hold in momentum that Mark brought up on Twitter. And if you would have held it, guys, it eventually would have given you the stretch again. Now, ideally in our scenario, there was a long scalp, again, a trigger that you would have wanted to take to play the range again. Remember, the objective is for us to be able to play these trades repeatedly. We want to play that range over and over again. That's the whole point. Whereas a near-term trader or medium-term trader is just taking a short, waiting for this break. This market recovers. He's still looking for the break. He's in the trade and he's awash until he realizes those gains. For us, we'll take that play to the downside, maybe take some profit on the way up. If we get another trigger, we'll take that range again. And now to that same 100 pip range, you've squeezed out 150, 190, 200 pips. So we want to make sure that we're not too concerned or too reluctant to play the range again if the trigger is there. That being said, the pullback looked again like it was breaking this median line, but look where momentum found support, and that was the tell an overnight trade. And Mark, this is what I wanted to talk to you about. The 40 level in momentum did hold on the 5 here. Okay? So here is where the entry was yesterday. I left the analysis here just so we can review it. Here was the first exit. That was 19 pips. The second exit was this trend line here. I think that was like 38 pips. And then on the break back below, we just booked the same 19 level that we booked here. We booked it again. So you got 19 on the stretch, 38 on half, and another 19 on the other quarter. On the pullback, this was what Mark was noting. You see the pullback here late into U.S. trade, momentum held 40. So yeah, that's an indication that the downtrend hasn't resumed. In fact, you got a 60 break, then a 40 hold. This is suggestive that you still want to continue to look higher. Now, you would have had to sit in the trade deep into the close of U.S. trade before this thing broke higher. So from a scalping perspective, there's a lot here to think about. But inevitably, we would have gotten out at the 43 pip allotted gain that we were looking for, and that was right up here. We just missed it on that stretch yesterday. What happened in overnight, Mark, is that this thing came crashing down, and this would have probably faked me out. If I was holding any long exposure, you did inevitably get a false break below 40. Again, we checked just pips away from the 37.88 major key critical support. So all the more validation, guys, all the more validation. And on that check into key support, perfect bounce in 40 momentum, even though on the near term, you would have gotten that break. So I just want to caution you about holding too much emphasis on the 5-minute chart and trying to extend the scalp into a long-term trade. The biggest pitfall some people fall into, guys, when they're trying to move into this type of strategy is that they're going back and forth with the 5-minute and the 30-minute and the daily, and they see a breakout. Now a scalp, all of a sudden, they start to get a little greedy, right? And we're like, you know what, this is a breakout. I'm going to hold it and look for that long-term play. I have nothing against entering a scalp, leaving that last quarter on, that last fifth of the trade on, whatever leverage you're working with, and trying to play the extended play. Indeed, the biggest problem that new traders work with is that they're really quick to pull profits, but they're really slow to cut losses, right? So I'm all for riding out the winners. We just got to make sure that we don't look at near-term prospects like a 5-minute chart to try to justify, a much larger swing. Our objective is to grab the ATR as it's in our hands. We can always jump back in, right? We'd always jump back in. So, Mark, great eye on that 5-minute chart. You're looking at the exact right things, but just some food for thought there. I hope that helps. Chris says, I really wished taking a small position at 138 today. Can't catch them all. Yeah, Chris, thinking like that's going to make you a very aggravating environment, right? I should have. That was a great entry. You know what? When I go back in price action, I see a great entry or I see a great trigger, that just gives me more encouragement. Even if I missed it, well, I would have been looking at that. That would have been something I would have taken. Remember, the market will always provide more opportunities. Kicking yourself for a trade that's passed that you missed, it sidetracks you from focusing on what's coming up. So every time you see a trigger like that, all right, awesome, this validates what I was thinking, this looks good, let me look at more triggers to see if I can find something similar. All right? Eileen, great to see you. Smashing trade that was. Raj says, cheers, mate. Mark says, I did take it overnight and then figured Jamie's waiting for Euro Yen 127.90, so I figured Euro Aussie also pull back, and it did. So it took along again, same lower parallel. Well done, Mark. Yeah, I saw your tweet, man. He says, me and my correlations. A trade like that, I wouldn't really be too concerned about necessarily. Yeah, I don't like to load up, but in one directional trade, but we were, short Aussie and long Euro Aus earlier in the week as well, and that's, you don't want to stress the correlations too much. There are times where those correlations will be very helpful, but right now, you want to take every scalp on its own merit. Raj says, how would you enter the long now on Euro Aus? So let's look at where we are in perspective here on Euro Aus. The weekly opening range is still intact. And in fact, that 39.37 level that we highlighted yesterday, that's a new extension that was added to the setup, and that's an exact 618 off the low. So if this holds as resistance near term, honestly, you'd want to pull back into this region again before you start looking long. That being said, yeah, I mean, you have a really neat opening range, Josh, for the week. I'm sorry. Was that Joshy? No, that was Raj for the week, right? So I wouldn't necessarily be wanting to press along right into that opening range. I'd either want to pull back, or if the U.S. opening range sets up like this and we get a topside break, a stop against the U.S. opening range low would be a nice play also. You'd be looking for a stretch basically into 138, 139.85, 140, this region here. And at this point in time, you want to move this to the outside as well. All right. We're looking at the end of the day. The base case scenario is that this range breaks to the upside, and you see that stretch into 140.50, 140.70, big region of resistance. Depending on where you are in time, that starts to intersect on these trend lines somewhere early next week, around the 26th, 27th. So you might have some more chop in this region. Still looking to buy pullbacks. Bullish invalidation remains 37.89. Is bearish invalidation 138, says Raj. So in overnight trade, if you remember yesterday's setup, yeah, it was 137.85 actually. So it was this region here. This was the bearish invalidation level. This is bullish invalidation, has been all week. So you're looking to take longs off this region, major key support that's on the daily chart. And this was the break that kept topside bias in play. You got a trigger on it, 3-point trigger, and a breach of the US or the Asia Pac highs. So this would have been the validation. Now, guys, I just want to take one step back to clear things up. When we talk about the bullish and bearish invalidation levels, those aren't necessarily triggers that want to put you in the trade. Those are triggers that validate bias, right? So it would have been hard for me to justify a long at 38.60 because the stop would need to be way down here, right? That's like a 80 pip stop, 70 pip stop. I'm only looking for 40. That's not necessarily a move I can make. If we had taken a long trigger here, this is where you'd want to basically hold that, bring your stops just below, and see if you can get the stretch into the next target. So depending on where you are in the trade, the bearish invalidation level will either keep you in that trade and maintain that bias or invalidate it. Raj, does that make sense? I want to make sure everyone here is on the same page. That's a big point of reference. The invalidation level break, either on the long or the short, is not necessarily always going to be a trigger, but it's going to be something that will validate our bias. That's what it's there for. So now, okay, great. Had this broken to the upside, great. Now I'm looking to buy pullbacks. You didn't get any, but that validates what you're looking to do in the scalp moving forward. At this point, like I said, you're testing the opening range high for the week. So it's hard. Again, I want a nice pullback here, or at least an opening range that's pretty tight for U.S., and then try to tag 139.85, 139.90. But let's see what the 5-minute chart looks like again. Yeah, so you have the highs for London right there at 139.50. So far, the lows for U.S. are 139.15. I'm not really going to stress this anymore. Let me clean this up. These were yesterday's entries, so I just want to map that out for you. And in fact, that trigger didn't do much. Okay. So you're getting some divergence into the highs, price action making a higher high, the oscillator making a lower high. Remember, those divergences in overbought condition are very weak signals, so I'm not going to stress that per se. But if the U.S. opening range continues to pan out, and let's say we hold this range between 39, 39.50, then you see a short or a downside break, stop against the highs, looking for a move back into this region. Might be a nice short. But generally speaking, that would be fading the move. We're still looking to remain constructive. Okay, we're still looking for that stretch inevitably into 140.35. All right, Mark says, yes, thank you. Terrence says, any news reason for the spike in Euro Aussie? So, not necessarily. There was no data per se. And I don't really stress those kinds of things, Terrence, to be quite frank with you. Our focus is on price action. If we try to assign or correlate every move with an announcement or some sort of news spike, it takes your attention off of what really matters. So I don't really necessarily. I know what data is coming out at all times. I mean, let's not kid ourselves. The economic docket is of utmost importance when you're intraday trading, but I'm not really going to stress. Oh, there might have been some remark that Kuroda made or something. With that said, the vice chair for Kiwi came out yesterday with an interesting comment saying that, they might need to cut rates if demand starts to get sapped more, which is absurd because they raised rates this year. Games like that, if you start following those headlines, you're just going to continue to go all over the place. Another thing that came out overnight is Kuroda coming out saying that they might be looking to possibly achieve that 2% inflation target ahead of schedule. Maybe late 2015 was what he's been suggesting now after it was early 2016. And then you saw some yen reaction. Long story short, guys, the same thing would have happened if we were just watching price action and playing the levels. So, for me, if you ask me personally, the technicals are fundamental. That's what we're trading. And we won't go into that conversation because we could sidetrack that for days. But Terrence, I hope that offers some clarity, at least from what approach we take here. STE, I'm not sure who that is, but good to see you. It says, general question regarding fibs for scalps. Do you rely more on, say, the weekly range or overnight? Good question. I don't know if I want to necessarily assign more importance to one or the other. It depends where we are. So STE, if we're in a trade and we're near the weekly lows like we were here, this was, a trade that when we looked at it yesterday in the webinar, just made sense because you're at the weekly low. Here's your weekly open. You're at key support. So there wasn't necessarily an opening range break here, right? So the overnight trade session, all that didn't really matter. The break that we took yesterday was more momentum based on a couple of different time frames that charged the advance. So here's the trigger that we actually took yesterday, right? Trigger break at support. So there wasn't necessarily an opening range session play here. In fact, it looked like the European opening range broke to the downside with this move here, but we noted key support. So it depends where you are. Oh, Stefan. Little typo. He says, don't know what happened. But does that make sense? Does that answer your question? Don't focus on what's more important. Focus on where the trade is. He says, yes, thanks. All right. Chris says, Greek liquidity will stretch into June. Announcement / rumor generally positive for the euro. Yeah, sure. Sounds good, Chris. I mean, I feel like we get one of those every single day. At the euro dollar base, here's what we're looking at. You did almost get a false break here. It looked like it was breaking this median line we've been watching since the lows last week. But broadly speaking, it's just sitting in the weekly opening range below resistance, which is a huge confluence region right here. Let me just show you the reference points on that. 618 off the high, 618 retracement off the decline. It's just been in the opening range just below that. So, I haven't really been too hell-bent on trading the euro recently. But, these headlines, guys, they don't mean anything, right? All right, cool. So if that was such a big announcement with the Greek liquidity, well, it's the same exact move we saw yesterday. Was there a big announcement yesterday about Greece too? I mean, I don't know. That kind of noise just sidetracks you, I think. All right, so that is the Euro Oz. Any questions on that? Looking higher, looking to buy pullbacks, looking for long triggers while above 37.80. Again, near-term support right around 38.70. Same breakout zone that we saw in overnight. And that puts your bullish invalidation on the near term right around this region. Again, stress the region here. Same region that we invalidated the short side there. As far as triggers are concerned, let's just highlight some here on the 30. We'll see if that divergence materializes on the 5. All right. Moving right along. I just want to touch on gold real quick. That made a pretty big move yesterday. Everyone's, running to the hills here. We are at support. You might get a little bit of a rebound here. The major key support is still just lower, around 1178, 1177. We've been watching this region. Again, also as you get deeper in time, that region is going to choke up as you ride this trend line here. But there's a lot of different scenarios that could be playing out, right? This is the operative current slope I'm working with. It looks like, again, it's catching the lows here, but look at momentum. So that's a 3-point trigger that broke yesterday on that move. Yesterday's move was an outside reversal candle. So it took out the previous session's highs, then closed below the previous session's lows. That's typically a bearish formation. And you could have a really clean head and shoulders play in focus here. You might have seen Jamie actually pointed out a chart of this. Really, really nice on his, which would suggest a much steeper downside move. From my standpoint, someone who tracks this a little bit more closely on near term, I think you still need to be very mindful of this region. But the break of that would certainly put 1158, 1150 right back on track. Remember the weekly chart for gold, guys. One of the clearest of the commodities still, in my humble opinion. This thing is obviously still in a very critical range. Major key support, 1155, 1137 on a weekly standpoint, has been, the last 2 years, an absolute key range. So if this thing starts to break down again, you get some weekly opening range breaks to the downside, and you clear 1177, that's still a major key support target you need to look at. So the gold trade, not something that inspires too much excitement on an intraday basis, but I can't help but follow it, so I'm always here to share it with you. All right. The other trade I wanted to go over was some of the radar trades that we've been following. Again, these are trades that are kind of just panning out. I might dribble a little bit here and there in it with some lighter scalps. If I highlight a trade on Daily FX, typically I'll put it here on the radar too, guys, just so you have one place, one-stop shop to see everything. You don't need to go all around. But the breakout yesterday was just pretty sweet. Pretty sweet. Excuse me. So here's sterling yen on the daily. And the major key break was right here. If I zoom this out enough, after I just zoomed in, okay, just a couple things I want to point out. A, basic trendline support off the lows from 2012. Tagged again here in 2014. We dribbled and bounced it, broke, acted as resistance. That just broke yesterday. Okay, the operative median line off the highs. Median line resistance, that broke. The monthly pivot, again, not something we stress, but confluence region, something you want to pay attention to. So we blasted right through that, and we closed above it, and momentum saw the first 50 break that we've seen on a daily basis since February. And here's what happened on the February break. Took us right into the highs into late March. All right, maybe that was just a rally, Mike. Maybe that was just a fluke. All right, let's go back and look. The last time we broke 50 beyond that was right here. And that was the onset of the rally that took us into the yearly highs. Now, if we go back far enough, again, you're going to see some times where it didn't give you all that much break. But the point being, after a deep move into that, completing a 1618 extension off the high, you had that median line and all those breaks, it shifts the focus to the upside. It also broke the monthly opening range. So here's your April open. And you want to stay constructive above basically 179. Okay? So that's the daily chart. Kind of got your bearing straight. You know where you are. Major key resistance, that's easy, 181. My favorite setups, if you've been with me for a while, you know I talked about these for the last 5 years on Daily FX. My favorite setups, 100 off the low, a 618 off the high. Those confluence regions tend to be so paramount. You either get a massive reversal, you're looking for short triggers, or the breakout will typically charge a very nice play. So we'll see if that offers any clarity here. They both line up exactly right around 181.05, 181.12, and that's the focus on the upside for sterling yen. Here's what it looks like on the intraday. Absolutely clean, beautiful pitchfork off the lows. Look how many tags we've gotten, both along the median line and the upper and lower median line parallels. As we came into trade yesterday, here's what the scalp looked like. We were just teetering out right ahead of that median line, okay? And essentially, you're looking for long signals. Now, there was a trigger that gave out here. It wasn't the most, what's the word? Was the most favorable trigger just based on the fact that as the trigger gave out, you were already more than 36 pips out. So it was going to be hard to justify the long. But premise being, you're still looking to buy pullbacks well above the lower median line parallel. So you might get another breakdown here. This would be a place we'd be very interested in long triggers. If it stretches into 81, even if I miss that long there for that play, an area of which you might look to play a little bit of a short scalp or the fade against resistance. Again, we'd need to see some short triggers up here. But that's the setup here for sterling yen. I think it's a beautiful play. Longer term, this is my trade of the year, sterling yen. I really do think the fundamentals are going to start catching up with this a little bit more. Not to start shifting towards the fundamentals, but if you look at the biggest policy divergence, guys, it would have to be somewhere with, the BOJ, aside from the ECB, and either the Fed or the BOE. And I personally think that the BOE is going to start to accelerate those extra interest rate expectations. You already start to hear it with some of the comments that we got from the minutes. And once we get this election nonsense out of the way and all that, all that noise, I do think that you start to see the pound start to firm up a little bit. In any event, right now it's tough to justify any major core positions just because we've been getting a whole lot of chop. But let's look at the sterling yen on the intraday. I'll leave that for Raj later. Okay, so notice one thing. Do you see all these stacked up? That's a conviction resistance target. Okay, basically 80-40, let's call it. And that's basically yesterday's London high, yesterday's New York high, last night's Sydney high, last night's Tokyo high, today's London high, and today's U.S. high all come in right around 180-40. Okay, so the intraday chart here offers clear clarity on that. Momentum signature, you did get that last dribble there, but doesn't mean anything, right? Price didn't even try to press the extreme. Actually, we did, but we're right at the extreme, so that's not an operative play. So right off the bat, you're looking at that level as something we want to highlight here. So I'm going to go ahead and drop that there. And with that being the U.S. opening range high on the top side break there, you'd be looking for that stretch into 181 finally. And what you could do, here's the Tokyo lows from last night. That's 179.90. We have that highlighted as support. Watch for a break of this region, guys. it actually might be a decent long if you get some triggers down here. Against that 79.90 target to try to get that stretch into 180.40 be the first part. You'd start to peel off some, bring your stops in once you get the break, and then to 81. It's kind of tight here at the highs, and again, you've already made the stretch to the opening range break. Here was the break yesterday that kept the focus to the upside, so much be more comfortable with the pullback getting long down here, but on a scalp basis, possible game plan moving into the U.S. session. Chris saying the last two and current 240-minute candles aren't pretty on sterling yen. Yeah, I mean, this is kind of messy, right? Because last night we highlighted this as support. It kind of broke through, but you didn't really get many closes below. It kind of just basically scratched that median line. Do you see how clean that thing is, guys? It's ridiculous. So the focus is on that support near term for sterling yen. Mark saying Aussie dollar long is setting up on the scalp. Yeah, look for that break. See if we can even drill this down to 1 minute and see if there's anything going on there. It's not a conviction trigger yet like it was yesterday, but remember, yeah, and you're getting that divergence to the low. Might be a nice scalp. Sure, let's take a look here. See if near term we get anything that could give us a break of some sort. Watch that 60 break in momentum, but it does look good. It does look good on the recovery here for the Aussie dollar. Remember, Aussie's still in the weekly opening range. We haven't even cleared that yet. So with that being said, I just want to take a quick look at what the dollar is doing. Yeah, so that initial jobless claims didn't really spark any volatility. Awesome. Yeah, it could be a decent play. I don't know if I'm going to be willing to jump into it at this point. We kind of stretched it past what you'd be wanting to put as your stop. But if you do get a pullback here, I don't think this is necessarily going to be a stretch like we saw Euro Oz yesterday, guys, because we haven't necessarily cleared the U.S. Opening range yet. It's still right here. So maybe looking to buy pullbacks on this one, but long story short, the broader Aussie trade really needs to see a break of that near-term support before you can start getting comfortable on the short side again. And the trigger looks like it's going to give out. And remember, this is only premised on the 30-minute candle close. So that's why we jump into the near-term chart. We look for those triggers to give out. This is something we watch once we get into the trade. And once we have the trade in and the 30-minute candle closes on the break, it's validation for the broader position that you're holding. But it could be a decent long scalp. I wouldn't get too excited. Remember, as we get into 77.73, 77.80, this is where I think a sweet butter zone for a new short starts to look. And this is the invalidation. All right. Joseph says, Aussie CAD at support zone. Hopefully you can cover it, please. Yeah, Joseph, absolutely. We have time. So 15 minutes here, guys. Feel free to throw out any pairs that you're looking at. Sterling Key, I got to get that for Raj. I won't forget. But Aussie CAD, which was on the radar earlier in the week, here's what we were looking at for Aussie CAD. Major key support, 93.85, 93.90, right into the 94 handle basically is still the focus. I'm not really going to stress this at this point, although I do want to point out that on a closed basis, that thing is still intact. Today's close is going to be what we'll be looking for if it does break, and then we just scratch that. I don't want to really stress something like that that's only had a couple of touch points. But the point being, this is still the major key support. So this has been on the radar for the last couple of days just because the weekly range has been, textbook, guys. Here's last week's open. Once you made that final break below 95.60, it's just been back and forth and back and forth and back and forth. easily getting your 27 pip target on every trade. So you're right back at support. Actually might be a nice long here too. Who brought this up? Joe. Take the high in price. It's a nice trigger right there. Let's bring up the 5. So 94.60 comes up as a level of interest. That's going to be the Sydney-Tokyo lows. And it's also the London opening range low that gave you the downside bias into the stretch. So it's going to be a little hairy ahead of that, 94.66 or so. No, but it looks good. A little messy on the triggers. But divergence into the lows. Remember, divergence into these lows, especially when the triggers or the reference points are close to 50 like this, typically is a nice trigger, or typically is a nice indication that momentum is turning over. Not really thrilled about the resistance trigger, but either way, looks like the first 50 break we've seen in a couple of hours. Another possible long trigger here. As close as you can get back into that 94.45 target might be a decent play. All right, I'm going to load this one up, and we'll see if we can possibly jump into this one ahead of close. What is this? Aussie cat. Okay. And again, we were looking at the Aussie dollar as a possible long too. A little bit different on the ATR here. You're looking for about 27 pips. Remember, on the Aussie dollar, you're looking for about 25 pips. But the point being is that this is at a much more critical support on Aussie CAD than Aussie dollar. So might be a decent play as opposed to trying to short necessarily the greenback. One other thing I do want to look at is dollar CAD. Remember, that was on the radar the day before as well, right here on the 21st. Dollar CAD's an interesting zone, and it's been there ever since. We're still watching this major key resistance, slope resistance right here, and this range is in focus. Initially, the opening range is in focus for the week, which is not that big. It's basically right here, above this median line and below 123. Momentum holding 40. For a continuation lower, you know what the trigger is here. Looking for that drop in 2095, and then key support at 119.90, basically. And this is a longer dated median line as well. But another one, even on the scalp for the week, it's just very similar to what the euro is doing. It's the opening range for the week setting up below resistance. So here's your weekly open. You traveled into that resistance, and boom. You're waiting for a break of this range to give you 123 break to the upside is bearish invalidation. You'd look higher. Obviously, break of the weekly opening range low, you're looking again for that drop into that 120.95 region, which was that 1618. So really nice sort of confluence plays here. I think we get a decent entry on this. Where's the Aussie as well? Yeah, so that's really tight opening range, even more conviction. So sometimes prudence pays. We'll wait for entries on this one. Again, I think that Aussie CAD looks pretty good, and also the Euro Aus as far as the resistance. If we get, like I said, if we get that break to the downside, it might be worth a decent near-term pullback. But you want to be mindful of trying to fade that to strength. Again, the weekly opening range high is what you want to focus against here as you short. All right, questions. Great, staying nimble. Thanks, says Joe. Hey, more than welcome. Aussie CAD's hour supports, only got that one. Sterling Key. was that for Raj? I haven't looked at that recently, so let me take a quick review on what that's doing. Ooh, probably should have. Look at this thing. Wow. Yeah, that went under our nose without us noticing. Well, clear breakout, okay. Nice momentum trigger break to the upside. Weekly opening range break to the upside yesterday at key support. It's a 50% retracement from the 2013 low. And those median lines, that's pretty good. It's pretty good. Let's see what the near-term chart looks like for Sterling Key. Okay, so here's your weekly opening range break. Okay, bear with me one sec, guys. Let's just test out some median lines in here, see if there's anything that catches our attention. Probably the first one I'd be looking at. Okay. Right. Is there an 88.6 in there? Yes, it is. Just trying to clean this up, guys. Sorry about the hold up here. As a reference, quick reference to anyone who's new to the room, you can always take a picture or a snapshot of anything that you see in the webinars here from me and Jamie in your GoToWebinar software in the top right-hand corner. There's a little picture of a camera there. So if there are any setups that you want to follow or that are not on the site that you want to kind of grab from the webinars, you can always click on that and it'll take a snapshot. Feel free to do that anytime. Just check back on that Euro Oz real quick, and Aussie CAD, still no triggers. Okay. Yeah, so this actually looks primed for a little bit of a pullback, in my opinion, Raj. Nice stretch. Remember, those opening ranges, when they break on a Tuesday, Wednesday stretch like that, you look for a Thursday, Friday high. So it's Thursday. We've stretched into a new high. Wouldn't be surprised if this thing makes another stretch into 99, but you have this median line, which could be in play, a little bit more conviction on that touch point. And then you have the broader median line off the low. I'm not really going to stress that per se as much right now. Either way, into an interesting area of resistance here. Let's see what Sterling Key looks like on the 5-minute. Okay, ongoing divergence. Lower high, to the right, lower high, higher high, higher high, higher high. It's a 5-minute chart, but it's there. You have divergence on the 30. They're a weak signal because they're both above 70, but it's there. Back below the Tokyo highs. I mean, this would be a sell on a bounce type of play, and to be quite frank with you guys, this would have been a trigger I would have been very interested in, specifically on the back of all that divergence. Remember, RSI, stochastics, all these oscillators are backwards looking, guys. They're not forwards looking. So we don't want to put too much emphasis on it. I know we look at triggers all the time, but we're only looking for these triggers to justify what we're seeing in price. Price is what we're trading. So I say that with just as a disclaimer, but on a trade where you have, the most conviction triggers are going to be the trades that have divergence into a trigger break. So either something like this, where you're making a lower low in price, was that divergence? No, this wasn't. But if you were making a lower low in price, the oscillator makes a higher low, then it goes into a trigger break. Those are conviction triggers. So lower high, lower high, lower high, then a trigger break as price is coming into resistance is something I would have been interested in. At this point, to try to play it, as close as you can get to 99 on the stop. You're almost 70 pips away right now. It's a much larger range ATR. Not for the faint of heart. If you're new to the strategy, you don't necessarily want to jump into 50 quarter ATR trades just yet. You want to stick with something a little bit closer, but definitely something you brought my attention to here, Raj. Now the broader trade, again, this would be a scalp. I don't necessarily think I want to really press this short side of the broader trade for a longer term move here, but yeah, you're coming into a nice area of resistance near term. I want to look to buy the pullbacks there on Sterling Key. Near term, you're at resistance, look lower against 99. This just needs to be adjusted, by the way, guys. Sorry about that. That's where we are. All right. Mark says, damn, I should have listened to Raj first. He says, Raj, how would you get in that now for the longs? Yeah, so for the longs, I wouldn't necessarily be looking to press that this week at this point on a stretch like this. If you get a pullback, basically you'd want to play it off the median line. You'd want to play this region. Look for long triggers down there to play the pullback. After a stretch like this, objectively 95 is really the invalidation level. So you could see a drop of that steep, but that's where I would look for initial support. On a move like this also, your retracements are where you want to go. I mean, that's what they're there for. These tell us where we should start, looking for some support. And typically a 50% or 618 is what I'll just run to right off the bat on a move like this. And the 50 comes in just below what we highlighted. Does that make sense, Raj? On a wide range trade like that, you kind of need to be patient. And you'll get it. This thing's putting in 200 pips on a daily basis. You'll get it in a pair like this. The Sterling crosses are notorious, guys. Either that or honestly, Raj, if you see a topside break above 99, 99, it's basically 2, just below the 2 handle is where your next sort of objective target where you're going to be, and that's basically just the highs that you made for April. It's the opening range high. Does that make sense? Raj says, yes, thanks. I'm looking to hold this long term once I get in. So I'm completely with you on that on a relative basis, Raj. But if you're looking to hold it long term, then you need a long term entry. Okay, I wouldn't necessarily advocate, taking a long here for a long term entry unless you're willing to put your stop against 93. This is probably not going to be your best entry. Do you understand what I'm saying? So let's not look at scalp entries to try to justify a longer-term position, what we were talking about early in the webinar. Right now, the immediate focus is against this 99 region. A break above that is needed to maintain the long bias that was issued yesterday with this move. Does the thought process follow, Raj? I hope that offers some clarity on that. All right, so a quick look at market conditions before we wrap things up here, guys. As far as the economic docket's concerned, tomorrow is going to be the player. You're going to get, oh, by the way, retail sales in overnight trade disappointed on both accounts as far as the UK, which is interesting because the pound is doing what it's doing. Again, not following headlines, following price action. Long story short, heading into tomorrow, the focus is going to be the capital goods order or the durable goods orders here in the United States. So that's going to be the focus at 8:30. Could be a market player just because of the absence of any type of pertinent U.S. economic data this week. We'll be looking for that. But heading to next week, the Fed is really going to be the biggest thing on standpoint again. looking at relative performance so far to open up the session, you do see that the dollar is kind of mixed. Stronger against the pound. Aussie, Kiwi, obviously the biggest loser on the session. Euro kind of bucking the trend a little bit, holding its own. So keep that relative performance in mind as we head into the U.S. If you heard that bell in the background, again, that's the U.S. Open here in New York. We're going to go ahead and wrap it here. Last scalp webinar for the week, but we'll be back on Monday for the public webinar on Daily FX at 8:30 Eastern. Tuesday, Wednesday, Thursdays, right here again on SB. We'll try to keep you updated on SB Squawk. Guys, best of luck trading. Keep it lighter as we head into the latter part of the week. Again, remember, we're actually going to be, next week is going to be the last full, or this is the last full week of the month, so we're going to close out April trade heading to Thursday of last week. Tends to be a little bit shaky as you get into those last couple of days of the month of the scalp, so we're going to tone things down a bit, but watch that Euro Oz. Again, a quick last update on the 5-minute charts. We'll see if that Aussie CAD range breaks. Look for this into the U.S. Open, and on the Aussie dollar setup we were looking as well. Really neat for the first hour of futures trades here in the U.S. Best of luck trading, and I will see you next week, guys. Cheers.